Crypto. All the crypto news in one place.
Fed cuts rate by 25 basis points in third cut of 2025. You know what's crazy? That's the headline of the day. It is not the headline to pay attention to. Right now, that news is breaking. We have Russell 2000 breaking all-time high. This is a monthly chart. We have the total crypto market cap chart excluding Bitcoin. This is altcoins continuing to consolidate on the monthly. It puts a smile on my face, the setup that we have going into 2026 because of the macro landscape that is setting up at the same time.
5.4-year sine curve. 5.4 years is the exact average weighted maturity of the debt. And it tells us the ISM should peak by 2026. We think liquidity probably peaks before that as the rate of change of ISM changes and the rate of change of liquidity changes. Our best guess remains well into 2026, probably Q2.
What Raul just said changes everything. Let me show you exactly what this means. In 2021, the US Treasury quietly extended the average maturity of government debt from 4 years to 5.4 years. One policy decision, and it stretched the entire business cycle by over a year. This is why the 4-year cycle Bitcoin is dead. It's not that Bitcoin changed. It's the underlying driver, the business cycle, got extended. Raul mapped this out using a 5.4-year sine wave, and it lines up perfectly with the ISM's current trajectory. The ISM should peak in 2026, not 2025, 2026, which it has for every single cycle.
What matters is the macro. What matters is everything I've been trying to break down in recent videos. That is years of PMI contraction here. And that is the Russell 2000. The purpose of doing that video was especially to correlate it to the PMI, the business cycle, because the Russell 2000, as I've been saying, and this is what the video was about, that's a reflection of business activity, not the S&P. It's this one, these smaller cap companies. That's what the Russell 2000 is. And so if we start seeing this pick up, we're likely going to start seeing PMI start expanding. And these two things happening, everybody, that is what we will see in a bull market, more specifically in a crypto bull market.
All right, let's break down what Raul just said. The ISM Manufacturing Index. Most people have never heard of it, but it's the single most important indicator for understanding Bitcoin cycles. The ISM measures the US business cycle, tracking economic expansion and contraction. Bitcoin doesn't follow the halving, it follows this. Let's look at the data. Every major Bitcoin top has aligned with the peak in the ISM, 2013, 2017, 2021, all of them. The halving gets the credit, but the ISM has been driving the entire move. Even in 2021, Bitcoin peaked at the same time the NASDAQ Tech Index did. Do you think Bitcoin's halving pattern is more important than the biggest tech index in the world? Equities are clearly more important than the 4-year cycle. Correlation doesn't equal causation.
Breaking news, this was just revealed. The 6th largest bank in the world, PNC Bank, rolls out spot Bitcoin access for their private clients. This just went into effect.
Good morning. PNC announcing that it has entered a strategic partnership with Coinbase. The arrangement will expand access to digital assets for PNC's banking clients and institutional investors, and PNC will provide banking services to Coinbase. Shares of Coinbase down about 3.7%, PNC up slightly. According to the release, the two companies will develop an initial offering that will allow clients to buy, hold, and sell cryptocurrencies.
And how this affects you, this essentially opens up a whole new pool of capital for Bitcoin and crypto. PNC Bank is the first major US bank to offer spot Bitcoin trading directly within its digital banking platform, meaning you open your bank account, you can buy, sell, or trade Bitcoin.
But Michael Saylor's strategy came out and said that multiple banks approached him to launch Bitcoin products and services. He claimed that BNY Mellon, Wells Fargo, Bank of America, Charles Schwab, JP Morgan, and Citi, and they're beginning to issue credit against Bitcoin derivatives like IBIT, which is BlackRock's Bitcoin spot ETF, one of their most successful products. Wells Fargo and Citi plan to offer Bitcoin custody directly within the banks, and in 2026, some of them will start extending credit backed by Bitcoin.
So if we look at the 2-year Treasury, the 2-year Treasury is the shortest term Treasury, or one of the shortest term Treasuries available to trade. And whenever this goes to the downside, in a very simple phrase, whenever this is going down, it means that the market is anticipating a severe rate cut. If the 2-year bond is trading higher, then it means that the market is expecting a interest rate hike. So when I place on the monthly time frame, when I place the interest rate data, the federal funds rate onto the 2-year yield, what you will notice is the 2-year treasury is always front running in recent cycles the actual federal funds rates.
If you will notice, every time we've seen a rate decision, Bitcoin has crashed. I would also like to note that on these 2 rate decisions, you did see a rate cut. And I don't recall if we did here or not. I think we did, but we actually we can prove that with the effective federal funds rate. I don't know. Actually, I don't remember if we did. I think this might have been a pause. But anyway, the point is, every time in the last 3 times that we have seen a rate decision from the Fed, it has been a bearish catalyst. It has led to a falling over on the market.
And yet again, yesterday, after we had the Federal Reserve meeting, we saw first a slight little push towards the upside and then a big dump towards the downside. And of course, on yesterday's video, I already mapped out what a bullish scenario would be for the Federal Reserve meeting and what a bearish scenario would be. And in the bearish scenario, of course, I said he is going to cut rates and he shows uncertainty about future rate cuts. And the second one is exactly what he said. Jerome Powell said that the interest rates are now in a plausible range of being neutral. So basically, he was hinting to the fact that potentially the interest rates will be neutral in the upcoming weeks, potentially months here. And if we're going to be looking at the forecast right now here, at least for the next 2 meetings, we're not expecting there are going to be any rate cuts whatsoever.
We've only touched, this is from Immortal on Twitter, we've only touched 36 RSI 5 times in history. Once in 2015's bear market, 2018 bear market, the 2020 crash, which was absolutely fantastic buying opportunity, guys, and the 2022 bear market. And now we've hit it again. Now check this chart out. Now you may think this is bearish, but look where that the red marks are on the bottom chart, not the big mountainous graph called the Bitcoin price. All right. Now this is the RSI, guys. Look at where these red dots are. These dots are at the very bottom. Okay. They're not the very top. So what this tells me is that this is a great buying opportunity. And I'm not the only person saying this. Lynn Alden also said that this is a great time to dollar cost average.
But the closest parallel that we've had to something like this happening with the Fed, where they like verbally announce some type of liquidity injections, was like in October of 2019. So I started this YouTube channel in November of 2019, 1 month after the Fed had started that. I think that may have been the triggering thing for me saying, wait a minute, something's not right here. But then having to like think back and, you know, what were the things that were happening in October of 2019, right? There's a little bit of banking stress happening in there. There was a little bit of liquidity issues happening in there back in September of 2019. And then the Fed came out and, you know, not QE, QE. Of course, they're renaming it something right here, but it's going to absolutely be labeled as a level of QE. But on October 11th, 2019, the Fed had announced that they would begin purchasing about $60 billion in treasury bills per month, similarly to like what they just announced yesterday of $40 billion in treasuries per month, also to address liquidity.
RSI, we just dipped our toe down here. It's not very often we do. In fact, the last time we did, we were at literally $15,000. That's the last time we were down here. And I have a lot to say about us being down here in the weekly RSI in territory that we haven't seen since $15,000 Bitcoin. And then the star of the show, the bottom of the screen, the stochastic RSI, the thing that could potentially save the day. We have a lot of breaking news happening in the stochastic RSI.
Plan. For me, I have not ever exited my altcoin portfolio since I started in crypto in 2020, 2021, right? I've never exited. And to be honest, it's been one of my biggest mistakes in crypto, right? Is I've just held things for way too long, right? You got 2 different approaches here. I would say an investment approach is looking up anywhere of 10 years. If it's 10 years, what I've been doing is fine, right? But ultimately, what I'm looking for is to financially free myself and my family. Okay, and this space still has a lot of evolving to do. So if you look at the last cycle, we had a way more aggressive altcoin run. Does not mean that's not going to happen yet, but it hasn't happened just yet, right? And that really made me thinking, why am I holding 200 coins in my altcoin portfolio? right? Yes, they're good and stuff like that, but nonetheless, money just ain't going to them, right? And that was a big thing for me as well to learn when it comes to investing. Really choose the blue chips and look at a way longer term approach. Okay, but I'm getting to that stage now where it's time to start cashing our portfolio. Now, the rule is we do not sell on red, and specifically multiple weeks of red, right? I always get out in green. And I'm just letting you guys know that I will be getting out up to 80% of my altcoins on this next push to the upside. I still think there is one more rally to go, and I do think it's the altcoin rally, right? But it's important to know that this holding type of game as well.
And if we're going to be looking back at not this meeting, but the 4 meetings before that, where we also got the interest rate cuts, we have seen Bitcoin dropped about, on average, 7 to 8% on every single meeting. And now, once again, we had the meeting, and Bitcoin already once again dropped about 3.5%. But in case it's going to be 7% here, it's going to be dropping all the way down to about $86,000. But anyways, this is just historical data. And I mean, the last time we got it, we dropped 29%, which was, of course, much more horrific. And there were some other reasons why it did happen. But ultimately, Bitcoin is still trading in this ascending triangle.
So Sheldon, whatever profit I make, I add it to the giveaway.
Okay, amazing, amazing. I'll stick to that too. Whatever I make, we give.
But I mean, what's profit? You guys are profitable. Like,
yeah, it's
something new. I never heard of it before.
Wait, let me explain profit. So you start with a balance of, let's say, 1,000. Yeah. Everything that is on top of that 1,000, so that means it's a different color than you're used to. It's green.
But it does happen sometimes.
So, did you enjoy the zap? Let me know in the comments.